Widely expected, Kathleen.
Widely expected. Certainly seems like the right thing for the Reserve Bank of Australia to do. And again, we may get some more information, some policy headlines as well today. But the bulk comes in a couple of days when we get a more thorough report from the RBA on what it did, why it did it, and why it may move again. Remember, as you just said, inflation actually, as I recall, in the latest quarter, fourth quarter, up to 6.9% year over year. Their target's way lower than that. They're hoping to get to something that's more like 2% someday. And they also are looking at a central bank, Federal Reserve, that has done what? 425 basis points in this cycle. The RBNZ has done 400. They've done, what, 325. They're behind in a sense. So this is another reason why they were widely expected to do some kind of a rate hike, but not necessarily to get more aggressive, because there are forecast that inflation will start to come down. They do have some sign that the retail sales not falling apart at all, but starting to slow down. Hiring still low, unemployment rate still low, I should say, starting to cool off a bit. And again, the fact that the housing market that got so hot has now started to cool off. House prices have been falling for several months in a row, and they have adjustable rate mortgages. That's what the majority of people have in Australia. So the impact of all these rate hikes is coming due soon, when a lot of these adjustable rate mortgages start resetting. When they reset, with rate hikes, having taken place, those monthly payments are going to go up, and that's going to put another pinch on consumers. All the more reason. Do the prudent thing. Take the middle of the road. Do 25 basis points. Keep fighting inflation. Send that signal to the markets, to consumers, to businesses, but don't do too much.
Well, to your point, Kathleen, the RBA did say that more rate rises will be needed. Inflation likely to taper later this year, and it will do what's necessary to achieve its inflation target. You got to wonder how many more to go.
You certainly do when you've got inflation at 6.9%, and they expected it to come down to something just over 6% this quarter. It's still far above. Phil Lowe has said they're not on a preset course. He has signaled the last few months that they will do what is necessary to bring inflation down. I think that the RBA has been surprised, like other central banks, that inflation has proved so persistent. So I would say, if you're worried about inflation, it's reassuring that they're signaling that they are going to hike rates more. And yes, the big question will be how much more. They're going to have to be watching for signs of disinflation. Remember what Jay Powell said last week at the press conference after the Fed downshifted to 25 basis points? Finally, disinflation has started. He has 2 years when inflation was high and not coming down. I'm so happy to be able to say it. I'm paraphrasing. That's basically what he said. But disinflation is not the same as deflation. It means inflation is rising more slowly. And again, central banks around the world, it's with some of these developed nations, more developed, I should say, have in common that inflation went up and it is starting to come down, but it's just not coming down enough. And if you let it stay high, it becomes entrenched. It becomes more entrenched in wages and expectations. So that's why they have to keep on this path. But I bet they're sitting there now, or that's what they sat about and talked about. Gee, how much more are we going to have to do? And again, we'll get their forecast. We'll get probably revised forecasts on inflation. We'll see what they say about growth. And then that will give us a better sense of what, certainly as investors, what people can expect going forward.